folks, welcome back to another episode of Matt Money. It's your boy, Uncle Matt. So, today we're just going to hop right into it. We're going to be talking about the ninth largest holding within the dividend investing portfolio. And really, nothing has really changed all too much. It's another financial stock for you guys. So if you guys haven't already seen the 10th stock, feel free to take a moment and pause and go watch that before we hop into this one. Otherwise, you're going to lose all the fun and a lot of the analysis that we did within that video. So I'm going to try to cut this one down a little bit and go a little bit faster for you guys. But hopefully scrolling in right now at the moment, portfolio value is about $470,000, of which we get about close to $15,000 in forward dividend income and almost $1,250 in monthly income. Just over 4.7% on yield on cost, just under 4.7% for dividend yield at the moment. And as you can see, if we were to kind of scroll over here, financials account for about a fifth of the capital allocation by sector for the dividend portfolio, and income is just over 21% for financials in the dividend income portfolio. Keep in mind, when I talk to the dividend income portfolio, it's about this $324,000. I can't break out at the moment the 401k value. Before we hop into the actual top 10 and everything like that, if you guys haven't already, feel free to check us out on Passive Income Educator, where we're offering memberships. Obviously, this membership is $2 a month, but what comes with that is about 10 courses, access to our Discord, access to Chart Masters at 50% off, and access to 30% off on one-on-ones. So if you guys utilize one-on-ones a good bit, this could be a good opportunity for you. But also, only 3 people have signed up so far, so we do monthly pulls for gifts that we plan on doing. This month, we plan on doing about $100 split between 3 different people. So all those people will basically get either their money back or more so. If you want your opportunity to get in on that gift, feel free to sign up today. And you just need to sign up for a minimum 3-month subscription. The rest will kind of take care of itself, and you're eligible for that monthly withdrawal. So obviously with that comes the Discord. You guys have access to that. And really, at this point, let's just hop right into the top 10. Let's give it a good look. Okay, so may or may not be a surprise, but for those of you guys that talk to me at a good bit, I do a decent amount of investing in Canadian banking stocks, or just one in particular, which is Bank of Nova Scotia. We'll highlight a little bit more on the specifics about my portfolio in just a minute, but it is the 9th largest holding that we have at just over $9,000 or so US. So I don't invest on the Toronto Stock Exchange for this. This is actually a New York Stock Exchange based investment that I have. You can see it's about almost a $51 billion bank. Beta is about a little bit less than 1. PE ratio at the moment for trailing 12 months is relatively good, although that will be challenged in the future depending on what happens with the volatility we're seeing in the market right now. Earnings per share is hovering around $5, which is pretty good considering the dividend is way less than that. And you can see that over the past couple months it's been a little bit up and down, but of course it's down recently just due to the fact of the volatility that we're seeing in the market. So I think in the long term this will be a good one to hold. And we'll highlight a little bit more about the financials and comparison against the S&P 500 in a minute. But I think this is a good company to hold, and we'll highlight a little bit more about the financials in just a moment. But I think if you want a little bit of outside exposure to the U.S. and you also want a bank stock, this is a good potential one to hold. And I think that with the oil price kind of coming back up and rebounding a little bit, over $40 a barrel, as you can kind of see here in the upper part of this viewing window here, we're not as stressed out for, say, West Canada Select like we were probably in the March-April timeframe. West Canada Select is probably trading at probably $30 a barrel. So that's looking good in the respect of some of the assets that Bank of Nova Scotia holds on the books. So pays a dividend quarterly, pays a pretty good dividend at that. At the moment, what you would end up having, and so I have some experience with this, for those of you guys that are interested in investing in potentially this company, if you were to invest in this on the New York Stock Exchange like I have under BNS, you would basically get paid out in Canadian, but once it gets hitting your bank account, it'd be transferred to US dollars. Another thing that I've noticed is they also take out, for me at least in Fidelity, they take out 15% off the top. Maybe not 4.5%, but 4.8% or so at the end of the day, effectively, once you kind of take out that withholding tax from Canada. So let's just go ahead and look a little bit more into my top 10. So let's just go in here. So if you guys haven't already checked out the number 10 one, it's Bryn Mawr Bank, and go ahead and take a moment to look at that. But we have Bank of Nova Scotia, which is currently sitting at about $41, just under $42 a share. Pays quarterly, and I'm almost even on the investment as a whole because I've been continuing to invest over the time period that we've seen over the past couple months. So I was investing when it was in the 30s, and so I've amassed a pretty good position here. Let's just take a quick look. So bought my first tranche of 100 shares at $55. $37 is when I bought some. Then I bought more at $35, and yeah, that's relatively it. We have about 227 shares, of which pays out about 595 a year. This 595 does not include the 15% withholding tax, and it also doesn't include foreign exchange, right? So it probably isn't exactly 595. In fact, if you want to take out the 15%, feel free. But I'm just going to leave it in there because I think, get a little bit of benefit from my taxes. So it's partially offset by that. So that 15% gets taken out. But at the end of the day, it helps me a little bit on my taxes because I'm already paying a tax on it. So position value for Bank of Nova Scotia is $9,500. Annual dividend is about just over $2.60. Yield at the moment is about 6%. Yield on cost is about 5.8%, just because I'm down on the position. You can see we have almost in about 2 weeks or so, we'll be getting another dividend hitting ex-dividend date here, and by the end of July we should be expecting a $148 payment, which is what's showing up here on the edge. We've already talked about it's a $50 billion company here. Earnings per share is relatively good at $4.48 compared to the $5.21 that was showing up on Yahoo. You can see with the decrease here in earnings per share, it does bring up or escalate the price to earnings just a little bit. But overall, I think things are looking pretty good. 52-week high is about $58, so we're 28% from there. And the low was $31. So it didn't even go below $30, which I think is surprising because I was not aware of that. I thought it did dip into the high 20s, and if it did, I probably would have bought more. So you can see we're 31% off of that already. So if you timed it perfectly, you'd be looking pretty good. For the top 10 stuff, just trying to think if there's anything else that I really want to highlight on this before we actually jump into more the comparison between the S&P 500 or not. I like this because it allows me to get just under $50 every single month from dividends. So like you saw here, this is about a $148 dividend payment, so I will be reinvesting this, and so hopefully it'll be about $150 US every quarter, so $600 a year, just about. And with that, of course, there's going to be the withholding tax that Canada takes, so I will lose that 15% there, but at the end of the day, $150 or $50 every month is pretty good, right? I'll take that, hopefully continue to grow it into the future. Bank of Nova Scotia has been a relatively good dividend payer over the past couple of years. And so yeah, it gives you an opportunity to pick up some more dividends from an outside source outside of the U.S. So hopping over to looking at and comparing to the S&P 500. So what we have here is basically a timeline here of the past year or so versus the S&P 500. So the S&P 500 is this lighter blue, Bank of Nova Scotia is this darker blue. And so we're looking at the past year, right? So you can see if we're looking over the past year, we're up about 13% for the S&P 500, while we're currently down just under 25% or 26% from Bank of Nova Scotia. So obviously we all know financials have been hit relatively hard over the past year or so. But if we were to kind of zoom out a little bit, let's just go a little bit more to maybe like 5 years out. So 5 years out, you can see obviously the S&P 500 is still killing it, 63% up compared to the 30% down compared to the S&P 500. I think partially some of that is due to the currency fluctuations we saw in 2016 timeframe. Canada's been getting pretty hit compared to the US in terms of currency. So if you were to look at it on like a currency to currency basis, Bank of Nova Scotia I don't think would look that bad. But since we're looking at it on a forex and exchange between the US dollar and CAD, I think it comes up pretty dismal. But once you actually kind of scroll out a little bit more, it starts to even out just a little bit. So getting to, let's just say, 12 years back, we're still down overall 12% or 16%, I'm sorry, for the Bank of Nova Scotia. We're up 116% since 2008 timeframe, so I think everyone's well aware of that in the S&P 500. But you can see it kind of starts getting back to normal for Bank of Nova Scotia if you go about 13 years out or so. And it looks like it's just about 65% up compared to the 172% in the S&P 500. But then you actually see it flip once you go back to 2000 time frame. So you can see in the 2000 time frame, I think that this is just based off the fact of the S&P 500 kind of going tracking back to this point. Of course, it goes all the way back for a while, but at the same time, I think that this is when this particular SPX sort of tracker is kind of starting out. So you can see that it dips down. Obviously, you had the recession in 2000, 2002, and it kind of hits the bottom starting in 2003, and then it starts coming back up to 2008 timeframe, and then it really goes on its tear over the past 12 years or so until more recently when it's gotten into its little recessionary period here. But you can see that Bank of Nova Scotia had a really good run in the early 2000s, and then it's kind of flatlined ever since, going up and going down. And so, with that being said, I think a lot of this has to do with the currency fluctuations that we're seeing. And I think that if you were to buy it at this point, I think it will eventually go back to its more normal sort of up. If you were to kind of look at it from that perspective, so I think if you're looking for a short-term trade, this could be a good potential stock to buy. Although there is some risks associated with the oil aspect of Bank of Nova Scotia, I think in the short term it could be a good one. There might be better banks to potentially buy. I like JP Morgan, but JP Morgan's kind of run up in price, and it's also trading at a premium compared to, say, Bank of Nova Scotia or Wells Fargo as well. So I also hold Wells Fargo, which we may or may not talk about in the top 10. So looking at this compared to this over the past, I guess, what is this, 20 years, you could say Bank of Nova Scotia actually wins out at 290% versus the 133% coming from the S&P 500. Now, before I finish off, I just want to walk through the financials. So let's look specifically at the income statement first. So we're looking at this column here. It ends in October of 2019 timeframe, so a little bit before what was going on with the pandemic going on right now. You can see that revenues have slowly been increasing over time. They also continue to have their credit loss provisions built in here. But let's look away and look at what the pre-tax income before a lot of the outside expenses kind of come in. So you go from 9.5 billion in 2016 to about 11, just under 11.5 billion in 2019 timeframe. Now, of course, you see when you do trailing 12 months, it starts to dip again because you have a little bit more credit loss provision built in. We might get into the quarterlies if I think it's reasonable. So once you actually get into earnings per share or actual net income attributable to shareholders, it looks pretty good, right? You go from about 7 billion to about 8.2 billion. So not too shabby. You did see a little spike up here in 2018. I think that was due to interest rates across Canada and the US. And I think with interest rates kind of coming back down to 2019 and choking back on those interest rates, it kind of comes back down to normal at about an 8.2 billion attributable to shareholders. So you can see that they're kind of blowing up the share count a little bit. So it hasn't increased like substantially from 1.204 to 1.222 billion shares. So nothing too crazy there. With respect to blowing up share count or anything like that. And you can see interest income continues to go up as well. Overall, can't complain with that. Take a quick look at the balance sheet. So to give you guys a quick reminder, this bank is about $51 billion if you're kind of looking at what the current value of the company is. If you were to look at stockholders' equity, it's about $67 billion. So that means if you don't write off any of the assets or the oil gas assets, if the West Canadian oil sands assets remain intact and you don't write those off, and you were to say liquidate the company as it is right now, you'd walk away with a pretty decent chunk of money. But that being said, what is the current price to book at the moment? So let's look at 51 divided by 67.5. So we're looking at just over a 75% price to book. But of course, I think the reason why it's trading at below book value is because of those oil assets, because of those other mortgages and other things that are on the books that might go into the liability column if people stop paying their mortgages, people stop paying their loans and everything like that, and people continue to go into forbearance and continue to utilize forbearance. And looking here, you can see that the assets have kind of blown up from 9 billion to almost 1.1 trillion. Um, and the liabilities have also done the same. So almost 850 billion in terms of liabilities. That's grown to just over 1 trillion in liabilities, and looking good so far with that. But you can see that the bank has continued to grow its kind of stockholder equity by increasing the amount that it's providing in assets and liabilities. So yes, it's increasing its assets, but it's also increasing the liabilities. But that being said, it's also doing a good job of being able to get that back to stockholder equity. So they're not just saying taking on more liabilities or more assets that are going to decrease or erode shareholder value. So this is where I have a lot of fun, right? When I get to the cash flow statement, because I love cash flow statements. So let's take a quick look here overall with what's going on and see what's up, right? So you could see relatively quickly all the net income coming from the first kind of sheet that we looked at in the statements here kind of come back into play. So from a net cash kind of provided by operations perspective, you can see 2016 wasn't too great. That means we walked away with about $4 billion in cash from operations, whereas in 2018 we walked away with about 18 billion dollars in cash flow from operations. And we did see some issues in working capital as well coming in 2019 timeframe. So this kind of hits home a little bit. Doesn't make you able to do analysis on dividends like I normally like to do. But what I also like to look at here is looking specifically at debt repayment, common stock issued, common stock repurchased by the company, and the dividends kind of paid. So you can kind of understand, are they just issuing more shares to be able to pay the dividend or what have you? So you can understand, where's the money that's kind of coming into the cash register going. So you can see here, this is basically where the cash register is, right? You have net income, then you kind of remove a lot of these non-cash items, but then you also have these one-off tax items and stuff that can kind of come in here, whether this is purchasing something, a big investment or what have you. You have your capital expenditures down here. You can see that them kind of are issuing out assets and purchasing back liabilities. That's these two columns here. And then you can kind of look at what they're doing to repay their debt, right? So they have the cash register, which is at 4 billion in 2016, 17, almost 18 billion kind of coming in the 2018 column. And you can see that, okay, they walked away with 2.7 billion that they had to pay in 2016, 13.7 billion they had to pay in 2018 time period. And what do they actually end up walking away with after they have some of this capital and stuff like that kind of come through? So let's just say take 2018 for example. They had just under 17.5 billion in terms of free cash. So you know that they had about 17.8 billion kind of going there. They had some of these assets that they used to invest in some other activities here. And but at the end of the day, just based off of what a bank actually considers, right, minusing the capex, right? So this 416 million, and that kind of comes into the capex aspect of things. You could take the cash flow, 17.8, subtract out this 416 million here and walk away with your 17.4 billion, and that can be used to buy back stock, distribute dividends, or anything else of the sort. So you can see what they did. They used a little bit of money to pay down some debt that might be strictly to the company, some common stock issued as well, and they also did some repurchasing of some shares as well, and they also repaid the dividend. So you can see from a dividend only perspective, looking at it, they have a payout ratio of less than 25%. So 17.4 billion in terms of free cash that they have to pay out a dividend or buy back shares or anything like that, and they only use 4.2 billion of that. It breaks down when we get to 2019. I'm not exactly too sure what this big one-off item is here, but I would anticipate that maybe it's something to do with oil sands, maybe it's something to do with the differences in credit loss provisions going into 2019, because I know that that's something that they kind of newed up in 2019, is like, say, hey, we're going to start doing these credit loss provisions going into 2019. So yeah, I'm not exactly too sure what this big $17 billion write-off is here. Normally what I'm used to is seeing write-offs kind of on the income statement, not necessarily impacting the cash flow statement. But at the end of the day, I think it's okay. I don't necessarily see anything too wrong with it, other than the free cash kind of gets impacted a little bit at the end of the year. But you can see, even still, we still are building net cash in the register, right? We did issue a little bit of common stock, but we bought back a lot of stock in repurchases. We issued out our normal $4.4 billion in, say, dividends. And so nothing seems too out of the normal for this, other than maybe having to get a little bit more activity that they invested back into the company. Maybe that's that big drop here, is this normal $15 billion that normally is a negative number, meaning that they bought something, some sort of big, large capex sort of expenditure, whether it's a different bank or what have you. That I'm not entirely too sure. I'll have to feed back people on that. But yeah, that's relatively it. I didn't necessarily go back and do like a specific dividend since sort of date. I know that I think all the Canadian banks have mostly been paying for over 100 years, most of them, and I know Bank of Nova Scotia is part of that kind of club. Has it been raising it every single year? No, but I know it's been diligent about paying the dividend. So if that's something that means something to you, consider it, but keep in mind, it is a bank that's kind of trading under Canadian laws, and that currency impact associated with the company could impact when it kind of comes back from CAD going back to US dollars, or vice versa, right? You're buying it in US dollars at a certain Forex, and unless, say, the CAD comes back, then you're probably having to battle that, and it could be a negative impact on your dollars in the future. So just kind of keep that in mind. But if you are looking for a dividend, and a decent dividend at that, high 4, low 5%, after you're taking out that 15% withholding, it could be a good opportunity for you to invest in it in the future. So I think so far so good with Bank of Nova Scotia. I'm going to continue to hold it. If I have an opportunity and it does end up kind of coming back to normal, is it a stock that I might get out of? Maybe, because I do have two really good banks already, JP Morgan as well as Wells Fargo. And so, and of course, Bryn Mawr Bank Trust, which I mentioned a little bit about yesterday. And so, if I were to say consolidate one of them, I would say Bank of Nova Scotia is probably it. It is a decent opportunity to get outside and international exposure, but at the same time, is it the best stock to get international exposure? Maybe not. So I do like it. It's a good dividend paying company. I think it's got a great international presence. I use it down here in Trinidad, or a lot of people use it down here in Trinidad. And so it gives people an opportunity to kind of look elsewhere for yield, especially looking outside of the US as well. But keep in mind, if you're kind of drawn to this 6% yield and you're in the US, it might not end up showing up at your doorstep at 6%. So kind of keep that in mind as well. So trying to think if there's anything else, guys. I think that that's relatively it. Hey guys, I'll hear you guys and see you guys on the next episode for number 8 on the top 10 that I have in the portfolio as of June 2020. Thanks, guys. I'll see you later. Cheers.